Hey everyone, welcome back to our channel. I'm excited to be here today with Andrew Cigna. He's a seasoned commercial realtor that I work with. Love the guy. Today we're going to dive into the 2024 Canada real estate market outlook. Andrew, thanks for joining us.
Well, Dwayne, thanks for having me. It's always a good time to discuss dynamic Canadian real estate, and I'm eager to share my insights.
Cool. All right, so let's kick things off with a general overview. We've seen a challenging year in 2023, but Canada's real estate market has held up better than most. Andrew, how do you see this playing out in 2024?
Absolutely. Despite a 15% decline in investments last year, we're stepping into a year filled with opportunities. We're seeing more and more opportunities come up where you could actually get for a better purchase price. If you have liquidity and are able to capture some capital, it's a great opportunity to take advantage of what's going to come on the market for 2024.
That's cool. Great insight. So, the economic forecast is going to play a huge role in shaping the real estate landscape for this year coming up. And I've read that interest rates may see a decrease by late Q2 2024. How significant is this for our market, do you think?
It's actually really crucial. Lower interest rates can revitalize the investments activity, especially in the mid-sized deals. Additionally, with Canada leading G7 countries in growth, we have a solid foundation for recovery and expansion across various real estate segments and asset classes.
So what does that mean for real estate investors that potentially are looking to get in the market that are sitting on a bunch of cash right now?
Yeah, exactly. It's going to be a big hurdle for a lot of investors that over leveraged themselves in 2021, 2022, when interest rates were really low and they never thought they would go back up again, and they overpaid. The biggest thing when it comes to real estate investing is people need to evaluate the purchase price and not focus so much on the interest rates, because interest rates fluctuate and they will always go up, they will always go down. Purchase prices really are the best deciding factor on when to buy a property. So if you're able to get a duplex now for $700,000 and then wait until interest rates drop so it jumps up your equity to 1.1, like it was during 2021 and 2022, you just made $300,000-$400,000 just sitting there adding to your portfolio.
Yeah.
So it really matters on the purchase, not off the interest rates. And people think that I'm crazy when I go, I love high interest rates. People are like, well, why? And I tell them, you make money off the buy.
Nice.
Right? And if you buy low, but your interest rates are high, when your interest rates come high, the value of your property is going to go up. So it's never going to be, you're never going to see interest rates and purchase prices go up at the same time. They're always going to go opposite of each other. So when that happens, I get excited. So I was always like, go higher. And all the other investors are like, why? It's like, well, this is why, because I want to buy a deal. In 21 and 20, there was no deals. Everybody was over leveraged and everybody was, just squeezing in the purchase. It was like, that doesn't make sense for me. And actually in 2020 and 2021, I didn't buy anything. I didn't buy absolutely anything. And everybody thought I was crazy. Me and my brother were ridiculed for not buying anything. And it was like, well, if everybody's buying, why am I going to follow the herd? If you follow the herd, you get slaughtered like them. So that's where I kind of deviated and I didn't buy anything during that time period because it's all off the buy.
Awesome. So we deviated a little bit, but that was great insights.
Yeah.
so let's move on to more specific segments. So back to multifamily, and I think we'll probably end on this. Is like, let's talk about affordable housing. Obviously, that's a really hot topic. We've got the CMHC program that's out there that has that as one of the pillars, which potentially could have somebody who's looking to refinance a current property into this program could be pretty lucrative on the cash flow standpoint because interest rates are lower, amortization's longer, potentially up to 50-year amortization. And I'm getting a lot of calls about this. I'd love to get your thought on multifamily and on specifically around affordability.
Yeah, like I think multifamily is a really good asset class. That's where I made a good chunk of my money. I didn't do a lot of volume of deals, but the ones I did, I got great returns on. Executing on it is great because not a lot of people are executing properly on multifamily. They don't understand the construction, right? The multifamily sector definitely needs a lot of attention. Developers should focus on meeting and growing demand for rental units. We need rental units. It's a must. Everybody knows that. The government has been proposing it. With all the changes coming specifically to Hamilton for density, that's a big indication. A lot of municipalities are hitting their housing targets. So they're getting rewarded. Like Hamilton's about to get a $12 million check. I know Brantford just got $3 million check.
Wow.
For hitting their targets, right? So it's all coming into effect where everybody is pushing for housing. The government incentives and the rezoning changes could also play a pivotal role in addressing the housing shortage because, let's be honest, they need to, or housing prices will be through the roof. We have so much opportunity to make rental units. Why we haven't in the past, I don't know why. But I feel like we're in the right direction, and if people can capitalize on it, but it needs to be done correctly. And what I try to inform investors, educate yourself on construction, because the best way to lose money, going over budget on construction. That's why we were very successful. As I actually had the privilege of partnering with my brother, who is really good at construction. He was one of the preferred contractors for a municipality here in Ontario. He understands commercial construction, how to stay on budget, how to squeeze every drop out of a penny.
Excellent. Well, thanks, Andrew. Those are great insights, and I always appreciate you coming on to my channels and chatting a little bit about what's going on the commercial space. I think, on the residential side, my phone's been blowing up because you've got people that are trying to get into the market, but I've never seen such an increase on the multifamily space. So much interest in the CMHC program, whether it be the standard program or the MLI Select program. Lots of interest to try to take advantage of some of these buildings that have great bones here in Hamilton, but on the efficiency standpoint could use a little bit of a hug. And so we're seeing a lot of people using the energy efficiency pillar for the CMHC program to retrofit some of these businesses so that they qualify for these longer amortizations and lower interest rates. So So Andrew, I appreciate you coming on the show today. Lots of insights. Really enjoyed the conversation. I think you're providing valuable insights on the market and what's going to happen in 2024 and some actual interesting opportunities that investors can look at. I'm going to put all your information in the show notes, but tell me a little bit about Keller Williams and Above All Real Estate and what you guys are doing there.
Yeah, so what we're doing is we're hyper-focusing on commercial and all the asset classes. Multifamily making the top of that list, to be quite frank. There's a lot of opportunity there. We are making a good push to market into all asset classes. We are working with investors. We do work with some homeowners as well, but really the commercial is the meat and potatoes of our business. And that's where we're focusing our attention.
That's awesome. Well, thanks a lot.
Awesome. Thanks, Dwayne, for having me.
All right. Bye, Andrew.
Bye.